What's up everyone? Different setup, but it's still me, and welcome back to ATS Funded. This is our Monday Insight. Today we are breaking down breaker blocks, what they are, how they form, and how traders use them to catch reversal before they become obvious. If you ever watch price sweep a key level, reverse aggressively, and thought it should have been in that, chances are a breaker block was involved. It's one of the most powerful reversal patterns in smart money trading, and most traders either miss it completely or confuse it with a standard order block. Let's break it down. So, what exactly is a breaker block? A breaker block forms when price sweeps a short-term high or low, grabbing liquidity, and then displaces hard in the opposite direction. It's essentially a failed move. Price looked like it was going on one way, trapped traders on that side, and then reversed aggressively. Here's the key difference between a breaker block and a regular order block. An order block is the origin of a move, the last candle before displacement. A breaker block is what happened when the original move fails. The order block that was supposed to all get broken through, and the zone that broke it become your new level of interest. Think of it like this. Smart money push price in one direction to grab liquidity. Once they fill their orders, they reverse the market. The zone where the reversal began, where price reclaimed the failed move, that's your breaker block. Bullish breaker. Price sweeps a short-term low, then displays upward through a previous bearish order block. That broken order block become a bullish breaker, a zone you'd look to buy on a pullback. The bearish breaker, when the price sweeps a short-term high, then displays downward through a previous bullish order block. That broken order block becomes a bearish breaker, a zone you'd look to sell on a retracement. The concept is simple but powerful. Failed moves create some of the highest probability setup in trading. Now let's talk about how to actually spot a breaker block in real time. There are 4 elements you need to see in sequence. Number 1, a short-term high or low gets swept. This is the liquidity grab. Price take out a level where stop are sitting above a recent high or below a recent low. This is the trap. Retail traders see a breakout and pile in. Smart money see the liquidity and fill their orders. Number 2, a strong displacement follow in the opposite direction. After the sweep, price doesn't just stall, it reverses with force. You are looking for large body candles, minimal pullback, and aggressive range expansion away from the sweep. This is the market showing its end. Number 3, the breaker zone forms. As price displays through the previous order block, that broken zone becomes your breaker. You mark it, the range of the candle or candles that got broken through, and you wait. Number 4, the price return and respect the zone. This is your trade. Price retrace back to the breaker block, and instead of blowing through it, it reacts. A weak rejection, a shift in lower time frame structure, a strong bounce, that's your confirmation. All 4 elements need to be present. Miss one and the probability drops significantly. Here's where the most traders get it wrong. They mark every broken order block as a breaker without checking whether the move had real conviction behind it. Not every zone qualifies. You need 2 things to validate a breaker block. First, displacement. The move through the previous order block must be aggressive. Large candles, strong momentum, ideally leaving a fair value gap behind. If price slowly grinds through the zone over multiple candles with no urgency, it's not a breaker, it's just price moving through a level. Second, confirmation that the level holds. When the price returns to the breaker, it needs to react. If price come back and cut straight through without hesitation, the zone has failed. It's not a breaker, it's a trap. This is a critical distinction. A breaker block is only valid if respected on the retest. Before that retest, it's hypothesis. After a clean reaction, it's a setup. I also recommend checking the higher time frame context. A breaker block that aligns with the high time frame trends carries significantly more weight than one that goes against it. If the daily is bullish and you spot a bullish breaker on the first hour, that's alignment. That's high probability. Be selective. One high quality breakers is worth more than 10 questionable ones. Once you identify and validate a breaker block, it's time to plan the trade. Entries typically come from the base of the breaker, the edge of the zone closest to the current price. Some traders enter on the first touch, others wait for a lower time frame confirmation, like a breakout structure on the 5-minute or 15-minute charts within the breaker zone. Stop should be placed just beyond the wick of the breaker zone. You just want to give them the trade enough room to breathe, but your stop need to be a level where if price reaches, the setup is clearly invalidated, no ambiguity. Target depends on the context. Common targets include the next liquidity pool, the opposite swing high or low, or the next significant imbalance on the chart. Some traders also use a fixed risk to reward ratio, like 1:2, 1:3, depending on their strategy. The most important thing is that everything is defined before your entry. Entry level, stop loss, target, and position size. No decisions should be made while the trade is live. You've done the work, now let it play out. Manage your risk, respect your plan, and let the setup do the work. Breaker blocks are one of the cleanest reversal setup in smart money trading. They are built on a simple idea. Failed move creates the best opportunity. If you can learn the spot, the sweep, read the displacement, mark the zone, and wait for the test, you'll start catching reversal that most traders only see in hindsight. Check your email for the full written breakdown of everything we covered today, and subscribe so you don't miss the next module. When you're ready to prove your edge, stop risking your personal capital and get funded with ATS Funded. Link is in description, and see you at the next one.